All right, everyone. Welcome to today's webinar, How to Blend Fundamental Valuation with the Insights of Technical Analysis. My name is Jerry D'Ambrosio. Before I start, there we go. Jay says all good. Just want to do a quick sound check just to make sure I'm not speaking just to myself. You guys can all hear me. Awesome. Jay, thank you. Willie, thank you. William, thank you. Tim, thank you. Pretty nice day here in the Charlotte, North Carolina area. It's about 66 degrees, partly cloudy. I'll take that at the beginning of February all day long. We'd love to know who you guys are, where you're joining us from. We do these webinars a lot. We get folks from all over the world. So I'd love to know who you are, where you're joining us from, what's the weather like where you are. You know, I'll take 60 degrees in February. I grew up in New York, and it got cold. And that's the one thing I love about the South is it gets warmer earlier and it colder later. It doesn't stay cold for very long. It's fantastic. In New York, our spring didn't start till about May, I remember sometimes. Peter says, good morning, cold here in Vancouver, just above freezing but sunny. Okay, sunny's good. Florida, 77, absolutely. Philly, 59. Brookfield, Connecticut, 60. Katy, Texas, 75, cloudy. Bill from Thunder Bay, Ontario, just a little bit below freezing, enjoying a snowy day. It's one thing I don't miss either about in the north is snow. Fort Worth, sunny, 64. Blacksburg, Virginia, Roger, awesome, 64. Well, fantastic. Welcome, everybody. Do want to welcome those joining us via YouTube as well. So we are streaming live on YouTube. Again, my name is Jerry D'Ambrosio, the manager of educational content here with VectorVest. This is our education team. I always like to introduce you guys. You might hear us from time to time, but you don't get to put the face to the name. So this is our education team. It's grown quite a bit over the years. I remember when I first started 16 years ago, it was Steve Chappell, that's the guy right next to me over on the left-hand side, and that was about it. Maybe one or two other folks was in the education team. Excuse me, we're on the education team. We've grown, obviously, over the years. Back then, I remember our education focused a lot more or just solely on the VectorVest program. How to build watch lists and how to run searches and create portfolios and run back tests. We've grown, obviously, in now that we teach folks how to trade options, how to manage retirement portfolios, how to swing trade, and just become a very well-rounded investor. So I'm really proud of these folks. This is what you're going to learn today. You're going to learn the difference between fundamental investors and technical traders. We're going to talk about what each one looks for in helping them determine whether it's a good investment, whether it's a good trade, because both of these folks here, both of these camps, are completely different in their underlying belief of what moves stock prices. Okay, so we're going to talk about the differences between each. We're going to teach you the VectorVest method of merging the two. Now, merging the two is not a novel concept. Swing traders and investors understand what both the fundamentals are telling you and what the technicals are telling you. But we have a very unique method of analyzing both fundamentals and technicals as well. By the way, guys, I have Ray Clark in the background. If you guys have any questions, Ray will answer them for you. Just wanted to make sure you guys know that he's here. So we're going to talk about the VectorVest method of merging the two, and then how to quickly and easily identify the best trades. Theory is great. You have to learn theory first, right? That's the beginning of the process of implementation, is learning theory. You have to learn how to apply it to the real market and really how to find trades and investments. You can learn all about what indicators need to be and what the technicals need to be, or what, whichever indicator you're using, you have to learn, how to find your trades as well. Okay, so that's what we're going to learn today. I think this will help if you guys stick with me to the end. I will share with you a copy of today's slides. Okay, we are recording this. Oop, just looked over. Thank goodness I am recording it. But yes, I am recording it. You guys will get a copy of the slides as well if you stick with me to the end. Okay, so the two different camps of investors are There's the fundamental analyst, and then there's the technical analyst. The fundamental analyst is trying to determine what the fair market value of a stock's price is based on these kind of indicators that you see here. Okay, so a fundamental analyst is going to look at macroeconomic factors such as earnings, interest rates, and inflation. So right now we're in an interesting, so in VectorVest we look at all three of those indicators: earnings, inflation, and interest rates, and we determine bull and bear market scenarios. Right now we're in a bull market scenario, case 3, where earnings and interest rates are rising, but inflation has been falling. So a fundamental investor is really going to pay attention to the macroeconomic factors in helping them determine, all right, am I going to be bullish on the market or I'm going to be bearish on the market? They're also going to look at the underlying company's financial strength. So they're going to look at company earnings, individual company earnings. So when a fundamental investor is kind of analyzing the macroeconomic factors that drive the market, corporate earnings is in that upper left portion there, looking at, as a whole, how well are companies as a whole really, and we look at the S&P 500 in terms of our earnings benchmark, how well are corporate earnings doing compared to the direction and levels of interest rates and inflation. They're also going to look at the underlying company's fundamentals. Okay, so their earnings, their liabilities, their revenue, their expenses, top and bottom line indicators, revenue growth, earnings growth. So they're going to kind of parse through all of that in determining what they know what the price of the stock is, but what's the true value of the company. The technical trader doesn't care about that. He or she is looking solely at price and volume, price patterns, price trends, volume patterns, volume trends, combinations of everything in terms of price and volume. Okay, they truly believe that certain supply and demand zones are really what are the kind of the turning points and what's driving the stock's price higher and lower. Okay. Who's right? There are two different camps. So who's right? Who do you believe is right? If they were both in the room at the same time, they would argue till they're blue in the face who's right and who's wrong. They have just truly different beliefs. Lawrence, I'm taking the words right out of my mouth. If I was there, I would tell them they're both right. They're both right. What we need to learn to do is we need to learn to merge the two. Merge the two. Not just look at price and volume in determining when to buy and sell an equity. Now, I'm talking about just if you're thinking about a shorter term perspective, even if your perspective and your objective and your desired holding period is only a few days to a few weeks, there's more than just price and volume that should be included in your decision making. There are the fundamentals of the underlying company as well. Now, if you are holding a stock for the long term, and this is really what I want to kind of drive home here, because we buy stocks for the long term based on fundamentals. And as long as market conditions agree and as long as the stock doesn't hit your stop criteria, you can hold on to these positions for a very long period of time. And I'll show you a couple of examples here in a moment. If you become aware of short-term price reversals and buying opportunities, what you can then do is supplement the long-term returns on that individual stock and trade the favorable price and volume opportunities along the way. So there's two different ways to do it. Okay, so let's look at an example of a stock that we would hold on for the long term. February 7th of 2023. McKesson Corp, MCK. This is a stock in the VectorVest database, and you can see what our indicators are telling us. So earlier I said that a fundamental analyst is going to look at so much data, right, in determining the stock's true value compared to what it's trading at, and then that'll help them make a decision on when to buy or not to buy. There's a lot of data to go through. So with VectorVest, we take all that data and spit out actionable, useful information. Okay? So in helping determine what the future price appreciation of a stock is, we have what's called relative value. With a relative value of 1.45, tremendous upside potential long term, and that's a fundamental indicator. So a lot of the data that a fundamental analyst will use is in that indicator. Okay, relative safety above 1, indicator of risk. So how risky, how safe is the company? Debt to equity ratio, sales volume, earnings growth, sales growth. So much fundamental data is included in that indicator. It's above 1, it's on a 0 to 2 scale, so that's good as well. So fundamentally, by looking at those two indicators, RV and RS, you know that it's a fundamentally sound company. Look at the price compared to where we value it at. We value the company at 503, current price is at 363 and change. So it's an undervalued stock and it's a safe stock, okay? However, right now it's not rising in price. So even though you have a long-term perspective and you say, I'm going to hold on to the stock, this is a retirement stock, why wouldn't it be? Right? Undervalued, safe, long-term upside potential, fantastic. Here's some other data. Earnings growth rate at 21%. Earnings per share at 26, 7% earnings yield. It pays a dividend. Good YSG, good dividend safety, good dividend growth. So it's a great stock that you should undoubtedly hold in your long-term portfolio. Okay? Is now the time to buy it though? Right? It has a hold rating. So right off the bat there, it has a hold rating. So let's kind of take a closer look at what price is doing before, determining when to buy it. So this is as of February 7th. This is just, a week or so ago, right? So there's no reason why you should not hold on to this stock or maybe even have this stock in your long-term portfolio. Here's a chart of MCK. Now the hard right edge is in October. Okay, we're looking at about a 1-year chart there from October of 21 to October of 22. No reason at all that you should not have a stock like this in your growth long-term portfolio, even as of the hard right edge. Okay, earnings per share here in blue, bottom left to upper right. RV, hard right edge at about 1.3 and change. I know RV was kind of falling there a little bit, but still well above 1. You're not going to sell a stock just because the RV is just trailing lower. It's above 1. That's considered favorable. RS growing strong there, almost at 1.2. Again, this is October of 2022. Nice earnings growth rate. The numbers were there then, right? The numbers were all favorable in October. If you're a swing trader, right, you're looking for some type of price. It's a fundamentally sound company, so that's the type of stock that a swing trader, even a technical trader, should consider trading. Why? Because I know you're recognizing a favorable price and volume situation, but isn't it nice to have the fundamentals behind us and a stock like this that, look, it has its pullbacks. The best opportunity to buy stocks like these are during oversold situations, or again, when a technical pattern is occurring or a chart pattern is occurring, whether it's a continuation pattern or a reversal signal. As of the hard right edge here, what is price doing? Right? So technical traders are going to look at, for the most part, at more recent price action. The stock price has just recently pulled back off of a new high. It still has a hold rating. It doesn't have a sell rating. It's above our stop price, but it's kind of capitulating there a little bit after that kind of sharp pullback off of the previous high. So you had a resistance retracement here. Looks like you have a nice demand zone right here as well, right? So let's take off fundamentals for a moment now. Okay. Yeah, that's right. Ken also said, let me go back. And it hasn't had a sell signal at all over this 1-year period as well. Thank you for pointing that out. What does that mean? That means you could own this stock. You can have this stock in your portfolio, right? Why wouldn't you? Even though we've had, even though the market's been up and down, this stock never got a sell. So even in a confirmed down, for example, what do we say? Hey, say, listen, don't buy anything more in a confirmed down and let your stops take you out. And a long-term core holding stop criteria is likely to be going to be something like a recommendation equals sell, right? We talk all about it. Angela Akers writes all about it in the views on what she loves for her long-term retirement type stocks, the exit criteria. Recommendation equals sell. No reason why this shouldn't be in your portfolio. So all right, so let's talk about that type of holding now, where it's a holding. Why not kind of pad your account? You're not going to sell it. It's not a sell rating. You're going to continue to hold it. But if you see a really solid price and volume pattern after an oversold period, you can take advantage of that and pad that account, kind of just add to your growth portfolio growth by shorter term trades. So there's two different ways to do it, right? There's if it's your holding and you're supplementing your long-term gains with short-term gains. If it's not your holding and you do see a favorable price and volume situation, let's make sure that it's a good company. And we look at the fundamental indicators. We pay attention to them. What is the RV? I would feel much less confident in a trade like this if the RV was below 1, if the RS was below 1, poor earnings per share. I just feel less confident about the trade. Okay? So let's take off fundamentals now. Let's just look price. What did I say? I said price is capitulating. It looks like it's forming was kind of settling into a demand zone, a support level, right? It was resistance back here. Again, buy and hold the entire time, VectorVest rating. It was resistance back here, so there's your supply zone there. 1 touch, 2 touches, 3 touches, okay. Little hesitation there, breaks through that resistance level, and now we're coming back down to retest it. If you're a trader, you look at these levels and you see or you recognize what price does at these levels. It could fall below support, therefore you don't buy it, and you only sell if it gets a sell rating in your long-term portfolio. What I would look for now, okay, so if I'm looking for a breakout above support, I'm looking for a really solid breakout above a recent price high. And I would use the highest high here just to make sure, kind of the highest high within this, at support, just to make sure, okay, well, listen, we're moving off of support, we're moving in the right direction. Demand is outweighing supply, bulls are winning, and they're pushing the price higher. You get the breakout the next day, and you get it on pretty good volume as well. So there's your trade. Okay, there's your trade. And worst case scenario, like, two ways to trade breakouts. Excuse me. You trade the breakout day, or you wait for the next day for confirmation. Oops. Okay, and you got confirmation the next day. Okay, you got confirmation. I know price closed a little bit below the close of the breakout day, but it did move higher, so you got your confirmation, worst case, the next day. So you're in the trade. You're thinking, okay, I got really strong fundamentals behind me. This stock has done nothing but move higher over the last year. I know it's pulled back from time to time, but it's pulled back to these levels and then continued moving higher off of them. So if I take this trade, what I look for is, okay, well, it's a short-term trade. I have to figure out where my exit is. Okay? I got to figure out where I'm going to exit if the trade goes against me, where I'm going to look to take profits. So the first part of that is where do I look to cut losses? You got to figure that out first. And in this case, it would be right below that support level. If you trade a stock off of support, it makes sense to put it right below that support level because, again, that is a level where demand outweighed supply and the bulls were able to push the price off of that level. If it happens, if the Bears kind of take control and they wind up winning, if it ever gets back to that level again, if it goes below that level, you want to exit. I see also a resistance level where price failed to move higher than right around 370 and change. If price fails to move higher than 370 and change again, then you look to take your profit off the table. So there's that structure of a swing trade on a fundamentally sound company. And, you look at resistance and you say, well, what if it breaks through resistance? Okay, well, what if it does break through resistance? Well, first off, let's talk about should I even buy this stock or not, right? Because even though the setup looks good, what's the market doing? Okay, this is October 4th. That breakout day there was October 4th of last year. So you always want to consider what the market's doing. On October 4th, what happened? What was happening with the market? Well, we were in a confirmed down, right? We were in a confirmed down, but look at our market timing indicators. MTI was below 0.6. The buy-to-sell ratio was below 0.2. Actually, they were lower before that blast-off day on October 4th. Much lower, actually. So on October 4th, which is clearly the day that the market blasted off of the oversold MTI and buy-to-sell ratio levels, the stock had a nice breakout as well. I mean, that's your recipe right there, guys. Market action, favorable market conditions, whether it's a trend change or a reversal signal like this, where the MTI and BSR, you go bottom fishing off of those levels. If you have a buy signal, market signal, I'm pretty sure the primary wave was up on that day as well. We probably got a green light in the price column of the color guard as well. You get your buy signal, and you get a strong retracement, a strong technical signal on a fundamentally sound company. Boy, you're really putting the odds in your favor. So here's what the stock did since May of 2020. So you might be saying, well, look at, okay, we're in a confirmed down. Why would I hold on to McKesson? We had another confirmed down here, right? So we've been in a confirmed down a lot there over the last year. Even so, as of the hard right edge, right, we're in a confirmed down. So you might be asking, well, why would I hold on to that stock? So here's a long-term chart now. I have the stop price on, and I also have the confirmed market calls on. What do we say? And I said this a few minutes ago. What do we say at a confirmed down? What's the type of guidance that we give you at a confirmed down? Listen, we're in a confirmed down. Don't buy any more stocks. Manage the positions in your portfolio. If it's a long-term retirement portfolio and you're using the recommendation equals sell as your exit criteria, follow that. If that doesn't happen, if the price never falls below the stop price and gets a sell, you hold on to the position. So to answer the question, why would I be holding on to stock? Because they never got a sell rating. So you're going to hold on to it for as long as you can until it gets a sell rating. Okay? So let's talk about the trade and how to manage the trade. Okay? We understand how to manage the investment. It's a little simpler than managing trades. I got to say that managing a longer term holding with a one stop criteria recommendation equals sell. It's simple. You look every day. Is price below the stop price? Does it have a sell rating? If not, you keep the stock. With the short term trades, there are different levels and indicators and signals that you might use to manage positions. Okay, so I said earlier. So there was our trade date, October 4th. I talked about the resistance level. That's the red line. So I said any hesitation or retracement off of that resistance level, take your profit. Price blasted through that resistance level. Didn't hesitate at all. Blasted right through it. You're still in the trade. Hard right edge there. I'm highlighting and I'm using that line to connect that candle because it's a reversal candle. Okay? So from that point to October 26th, you're up about 8.5%. You gotta look to capture gains here at some point. Right, the market's only up a half. You make 8.5. just to put into perspective, you're looking at 140% annualized. So what does that mean? That's a very large gain in a very short period of time. So it's time to look to find ways or indicators that will help you protect those profits. Very next day, some pretty heavy volume on a down day, and that's called a one black crow. That's a candlestick reversal signal. It's a bearish candlestick reversal signal. Adding another layer to it here, looking at another technical indicator, stochastics at the bottom. It's very overbought. I'm sorry, overbought. Very overbought. Price is blasted through that resistance level. You know, we recognized where the floor was. We were able to catch that trade. And here, and by the way, so what happened here? So we enter the trade here. In the next 2 days, what happens? Doesn't it happen a lot? Or sometimes, right? You buy a stock, it goes down the next couple of days. Well, it did. There's no panic selling, right? You got your floor. In fact, on this big green day, price actually opened right at that level, man, almost to the penny. It's not a coincidence, you know, when price bounces off a certain level. It's not a coincidence. But then, boom, you know, big blast off day, and then the stock just continued to move. So floor held, ceiling broke, great for us, right? So you got a bearish candlestick formation, and I am going to look to take profits on confirmation of that formation. Okay, it's what you do. You see an overbought situation, you see a change in sentiment, and that's what a bearish candlestick reversal pattern kind of says to us. It says that there is a potential change in sentiment. Now the sentiment is going from a bullish sentiment to a potentially bearish sentiment. You get follow through the next day, you're off. You're out of the trade. You take your trade. You take your profits and you move on. You look for maybe another opportunity on the same stock, right? Why not? We've already established, you don't have to reestablish the fundamentals. Actually, well, you know, fundamentals don't change rapidly for the most part, right? Fundamental indicators are slower indicators, slower moving indicators than technicals. So, you know, sure, always reassess the fundamentals. I don't know, you have to do it every week. But take a look at RV, take a look at RS, earnings per share trending higher. Keep doing that, you know, for sure. But look, if you see, you know, you got a nice short-term gain there. Price is retracing. It's pulling back. Here's my cursor here. Let me go back. Hard right edge. It's pulling back off of a new high, possibly approaching support. Because it was resistance, right? Until resistance is broken, it becomes support. Take your profit off the table. Look for another buying opportunity. Okay? Now I'm going to fast forward all the way basically to the hard right edge. So let's see what the stock did after we sold it. Well, it went up for a couple of days. Okay, went up for a couple of days and then just blasted not only, you know, right down through this support level, but look at where it stopped again. Look at where it stopped again. Stochastics got into roughly an oversold situation. Look at where the low of that day was, almost to the penny. You know, at the support level that we profited off of last time. So look for another retracement off of that support level, and there was your other opportunity. So we're able to, and look, how are you feeling during roughly this time period? When price really entered into support, how are you feeling about your long-term investment? Not great, right? Because the stock is just moving sideways, right? It's moving sideways. So you don't, you know, you're not. That position isn't making you any money. But what you're now doing is you're able to, and it's about learning how to do this stuff, right? You know, you're learning how to supplement those gains or the lack of the gains there in this type of an environment with some shorter-term quick trades based off some really nice technical situations. So there was your other opportunity. Oops, let me go back. There was your other opportunity here off of support. What's price doing now? Let's talk about the hard right edge. All right. So here was your other opportunity off of support. You established a resistance level here. I mean, it started to draw right from that high, so you look to take your gains off, and now the stock price is moving sideways. Now we're in this channel, obviously. We're at the low. We're kind of right in the middle of the channel. If we're looking at the two white lines there as the upper and lower lines, probably right in the middle. So I don't know what's going to happen. This is today, guys. By the way, this is I think this morning. The hard right edges this morning. What am I looking for? Well, if price falls back down to this support level, you best believe I'm going to pay attention. And if price retraces from that support level, there's your other opportunity. If price breaks above resistance, there's your other opportunity. So it's right now still in this channel. Right now, I don't see a favorable situation. I would look for either one of those right now. Let's take a look at another example. Okay, everybody with me so far? Thanks, guys, in the background for answering the questions. I'll answer some as we go. Another example here. February 7th, just again a couple weeks ago, United Health Group, fantastic stock. It's fully valued. Price is, $493. The value is $510. But look at the RV, look at the RS. Those are our fundamental indicators. You don't have to go to any websites with VectorVest and say, okay, what is this indicator, and go through their balance sheet and look at all the indicators, right, and all their values. Just look at RV and RS. Most of what you would kind of search for is included in those indicators. So the fundamentals are great. RT it's not necessarily the time to buy. It also has a hold rating, good earnings growth rate, earnings per share, nice 5% yield, also pays a dividend. Again, another stock where there's no reason at all that it shouldn't be in your long-term portfolio. Looking at the chart, this is August of 20 to February of now. I only see one day here where the stock got a sell rating, but this has been nothing but a buy and a hold. And we're looking at the hard right edge, by the way. Look at the earnings per share. I know relative value has kind of trailed off there, but again, not a reason to sell a stock. It's still above 1. RS still above 1. Good earnings growth rate at about, 17%. So another stock, guys, here that, should be and could possibly be in your long-term retirement portfolio. Okay? Again, that one day that it got to sell would be the only reason that you would sell it if it's in that type of portfolio. Now, I'm not going to dive in too deep because I think we get the point, but here's now same time frame, and we put on just a basic guys indicator, support and resistance. I mean, if there's one indicator that you should learn how to use, it's support and resistance. I've also added stochastics and volume to the bottom of the chart as well. So we're holding on to the stock for the long term. There's bumps in the road along the way. How can I identify some nice price and volume situations where I can benefit in the short term? Again, kind of pad the account. So here was kind of your first opportunity. During this time right here, I'm not buying, right? I'm not, even though if your perspective is longer term, and look, here's another, haven't talked much about it, but look, if you're looking for a long-term investment, yeah, Jack, 14.3 slow stochastics at the bottom, yes. If you're looking for a long-term investment, nothing worse than buying at a high, right? I know you're thinking years down the road, but boy, it's tough when you buy and then it immediately falls, and maybe you're down 10, 15%. It hasn't hit your stop yet, but boy, that's not how you want to start a trade, an investment. I'm sorry, right? We got to maximize profits. It's not, we got to always look for, even if it's a long-term, any investment, right? You want to get the best price possible. Any investment. You're buying a house, you're buying a car, any type of an investment, you want to get the best price possible. So when the stock is channeling here, okay, you got a resistance level here, and again, let's say April 21 is the hard right edge. You're going to look for a breakout above. You're going to look for a breakout above that resistance level. Okay. Again, if it's still in your portfolio or it's been in your portfolio, here is a situation now where in June of 21 it came back to retest that support zone. Remember, it was resistance and you were waiting for the breakout above resistance to buy. Well, now you got another opportunity here off of that support level. You have another opportunity here to buy off of that support level, and the retracement off of resistance, the failure to break above that resistance level, could have been your sell signal. You get the retracement off of support there. You get the break. Little hesitation. You guys see that? Little hesitation at that support level, but eventually buyers overcame the sellers and they pushed price higher. But look at where it stopped again. Again, it's not a coincidence that price stops and starts moving and starts moving at these levels. So there's another retracement in November of 2021. Another one there in January of 21. Another one there. Another one there. This is a stock that never got a sell rating that you could have continued to hold in your long-term portfolio, and you had 1, 2, 3, 4, 5, 6, maybe 7 other opportunities along the way to really profit from these short-term kind of reversal signals. And I'm just using support and resistance. And by the way, look at so here's another piece of technical analysis, is combining indicators. You got a support retracement when the stochastics oscillator goes from below 20 to above 20. You got a strong signal there. You have a strong signal in a fundamentally sound company. You're just really giving yourselves an opportunity for consistency over the long term by only trading stocks where the fundamentals are on your side. Okay? Now, I'm talking about sorry guys, I had a quick drink. I'm talking about your swing trading portfolio, guys, right? You can have a few bucks thrown on the side where you're just kind of speculating, right? And fundamentals really aren't that important. It's just news driven. I'm not talking really about that type of a trade, and it shouldn't. And those types of trades shouldn't, overly populate any portfolio. It should just be kind of some side money there. But your swing trading portfolio, which is kind of one of your core 4 possible portfolios, right? Maybe an options portfolio, a retirement portfolio, a capital appreciation portfolio, and a swing trading portfolio. A longer term capital appreciation and your swing trading portfolio. It's, you might have it broken up that way. So that's what we're talking about here. And it just along the way, you have other opportunities. Now price has moved into another zone. So price breaks out through resistance, and it creates now higher lows here where we have what was resistance is now support, and price is just kind of, escalating higher there. And we're continuing to take advantage of those situations. Okay. So the question now becomes, and this is a lot of theory. The question now becomes, how am I going to find trades, right? How am I going to find trades? What I've taught you so far is theory, right? Here's what we're looking for. Here's what the indicators should be telling us, what our V needs to be, what our S needs to be. GRT, EPS, right? Those are our core fundamental indicators, what those readings should be. And we also know what to look for in terms of, okay, current price action and behavior. And is there any patterns that are forming right now? And where is price compared to support? And, stochastics oversold. Let me try to find a really nice buying opportunity here on this fundamental stock. So fundamentally sound stock. So there's the 1-by-1 method. So how am I going to find my trades, right? That's where we're at. 1-by-1 method. This is where you're just going to, you know what you're looking for, but you're going through lists of stocks. Lists of stocks. Very time consuming, unnecessary if you have VectorVest, and particularly our premium package, our Pro Trader package, because what the Pro Trader does within our Unisearch tool is it allows you to scan for technical. Well, first off, it allows you to scan for anything. So it's not just scanning for technicals, it's also scanning for favorable fundamentals as well. That's what we're doing here. Now, that scanning process, or that dual scanning process, could be done manually, like I said, the 1-by-1 method, but you kind of, easier way. There's an easier way to do it. So for example, and this is not, guys, the holy grail of searches. This is an example of really what we're looking for. Here's a scan called Prudent Performers. Okay, so it's a prudent type stock. Look at the indicators. Earnings growth rate at 15%. Relative safety at has to be greater than 1 point. I'm sorry. Earnings growth rate has to be greater than or equal to 15%. Relative safety has to be greater than or equal to 1.15. Relative value greater than or equal to 1.25. So favorable fundamentals were sorted by VST. You can do this manually, guys, but it's just a lot easier this way. So we know that if that was it, if that's all we were looking for, we would know what type of stock is going to come to the list, right? But what we're also looking for is a better buying opportunity than if we happen to buy it at a high. Look, I know we want to buy stocks that are going up for sure, but let's wait for them to stop going down and then start going back up again to give us a nice buying opportunity. So relative timing is an indicator that we could use to help us determine an emerging uptrend. An emerging uptrend on a strong, fundamentally sound company. Well, what do I mean by emerging uptrend? The parameter that we're using is RT trending daily from less than 1 to above 1, from below 1 to above 1. That is indicating that the stock is now in an emerging new short-term uptrend. We filtered through the entire database. Actually, are we sorting? No, we're not really looking at any industry groups in particular. We're just not looking at contra ETFs. So it's basically the whole database of stocks minus inverse ETFs. Those fundamental indicators have to be above those levels, but the stock has to be just rising, kind of just moving off of a low. And here's an example. AEHR, as of yesterday, look at the long-term performance of the stock. Now, I also, and I have stochastics at the bottom as well. Okay? This is when I like to get into the program, actually. So I'm going to hop into the program real quick. Okay? And here in our Unisearch tool, don't mind all the nonsense that I have in my account, but I can add a parameter to that Prudence Performer search. And here's how I would do it manually. Just go to Capital Appreciation, RT. It's always good to show you guys how to do some of this stuff. Trending, and then I would select Custom. And day 2 is less than 1, and then day 1 is greater than 1. You're getting that crossover. Oops. You're finding that crossover. Okay? There's Tesla. If I take off some indicators here, where's relative timing? Just crossing from below 1 to above 1. Now it just recently crossed from below 1 to above 1, then broke down a little bit there, but it's now just crossing above 1. Let's take a look at the opportunities when RT first crosses above 1. I think that was a nice opportunity for a short-term trade there. So was that. Okay, so it's very easily done. One of the things that I promised to teach you here today was how to quickly and easily identify trades. Okay. So going back to the slides here, so as of the hard right edge, this is kind of the same search, but using a stochastics crossover from below 20 to above 20. Here's AEHR. It's a high CI stock, actually a new high CI stock. I didn't talk much about CI today, but CI is an indicator that looks at long-term price performance, long-term price trend. It measures a stock's ability to withstand long, lengthy downturns. This stock is beginning to do a much better job of kind of holding its own and being resilient during the pullbacks. It's basically at the hard right edge almost. So it's done a really nice job there, and that's why the CI rating has crossed above 1 and is at a really nice level, almost 1.6. Okay. We know the stock is fundamentally sound. You might be saying, well, why isn't there any fundamental indicators on the chart? There doesn't need to be, because the search identified the stocks for us. We don't have to worry about what the value of RV is, what the value of RS is. Okay? Here's another one, VRTX. Same day, same search. Okay? We're trying to find, this is a growth stock, right? This is a stock that we could have in our long-term portfolio. Now, it's a drug company. You got to make sure that you're not overly weighted in any one industry, right? So again, this is just an example of a possible longer-term investment, right? We know RV is high. We know our RS is high. It's also a high CI stock as well, adding another layer of technical analysis, because that's what CI is. It's a technical indicator. It's a VectorVest proprietary technical indicator. But look at all the opportunities here. CI crosses above 1. I mean, stochastic crosses from below 20 to above 20. There's your buy. Stochastic crosses from below 20 to above 20. There's your buy again. Price really never broke down through the floor, so you were able to stay in. Here, stock price fell. Never got a sell rating. But look at that stochastics crossover. Okay? Beautiful entry there. Seeing the same thing. So that's what technical traders do, and that's what they believe. They believe by using these indicators, history will repeat itself. When you get a stochastics crossover, you can just visually see in the past how the stock price performed from that signal. And we're seeing it again. Okay, we're seeing that same situation again. A pullback off of a new high, seemingly establishing another higher low. We found ourselves in an oversold situation on a fundamentally sound company. Fantastic entry, even into a long-term holding. So let's say you don't own this stock, but you're looking at the indicators, the fundamental indicators, say, I think this deserves a spot in my kind of core, holdings portfolio or longer-term portfolio. I could see how it's performed. Never gotten a sell rating. I could have held on to the stock the entire time. I don't know if the market right now is, we got a green light in the price column, but let's kind of take the market out of it for a second, and you want to put this stock into your portfolio. Here's a good buying opportunity. And again, you'd manage it like a core holding, but you're getting it at a much better price. Getting it at a much better price. So you might be asking, guys, I'm going to answer some questions in a little bit here, but thank you guys. You guys are awesome. You might be asking, this is fantastic. How can I take my game now to the next level? There's a lot more to it than just what I went through. Now, you do have a choice. You could do nothing. Okay? You could do it alone. Maybe take bits and pieces of what I talked about today, and you will get today's recording, or let us show you how to do it. Let us show you how to do it. I love to give answers away. I used to be a teacher. Full disclosure, I'd sometimes give answers away. I know that's horrible, but I like to give the answers away. So that's why we put together a brand new course, folks. This is a brand new course called Uncovering Trends, Technical Analysis the Easy Way. Never before delivered, so I'm excited to introduce this new course to you. So let me talk to you a little bit about what the course includes. You get the complete, it shouldn't say paycheck, it should say Uncovering Trends, I'm sorry, which includes 6 training modules. You get all the videos, the slides, you get graph resource tutorials, and a lot more. You also get 1-year access to the course. Now, the modules will be released one at a time. Okay, I'll talk about the contents of the module in a moment, but they're going to be released one at a time starting next week. So once you register for the course, you won't have access to it right away, but they will be released starting next week. Bonus number 1 is the mastery package. The modules are going to be pre-recorded, but the mastery sessions are live, and we're going to be there to guide you every step of the way. You get private, dedicated email support as well. I'll talk about the instructors for this course. You'll have all of our email addresses along the way. And then bonus number 2, you get the program. If you don't already have VectorVest Premium, which includes the Pro Trader technical searches, which become really important for this course and just really important for any trader or investor that's looking for these again, more favorable price and volume situations. Okay? Let's talk about some other bonuses. Okay? You're going to get access to 6 swing trading coaching group sessions for the duration of the course. Now, your first session will begin on March 1st. Myself, Steve Chappell, Dr. David Paul, and Stan Heller as well are your coaches. Steve and I are your primary coaches. And this coaching group is fantastic. I love this group because we teach a lot of courses, right? And we teach a lot of theory in terms of how to trade certain strategies. In the swing trading coaching group, we implement those strategies with real money, and we guide you each week on how to take advantage. What's the market doing? Should we be bullish? Should we be bearish? As a swing trader's perspective. So you're going to get access to 6 of those swing trading coaching groups for the duration of the course. Okay? So you get the complete Uncovering Trends course, bonus module, where you get the six modules. Guys, 60 plus lessons. We've broken it down so you can very easily digest this information, but the 60 lessons will be included in 6 modules. We'll do 6 live mastery support sessions. You get 70 days access to the VectorVest Premium, 1 year access to the digital course, and of course the swing trading coaching group access for the first 6 weeks. Now, course is sold for $1,990. The early bird price is available at $1,495, but folks, I want to thank you guys for being here. I always like to reward people who come to these webinars. Look, you took the time. It's smack dab in the middle of the week on a Wednesday afternoon. If you order before the end of today's webinar, we're going to knock an additional $600 off, $895 for the 6 pre-recorded modules, over 60 lessons, 6 live mastery support sessions, VectorVest Premium if you don't already have it, and the swing trading coaching group sessions as well. And now this is 100% money back guaranteed. If after the course is over, now do all the work, any assignment that's given, you watch the mastery sessions. If at the end you say, I'm still not satisfied, I don't, nothing here that I would need, we'll gladly give you a refund. So you might be asking, when are the live sessions? What if I miss one? First off, you go to www.vectorvest.com/trends, and I'm going to ask Ray to type that in the chat box. Thank you, Ray, for being here again. VectorVest.com/trends to register. But if you happen to miss a live session, or if you don't know when the sessions are, here they are. Mastery session number 1, we begin on March 1st, so a couple of weeks from today. Is that 2 weeks? That's 2 weeks from today is our first live mastery support session. They'll all be on Wednesdays, and those sessions start at 1 p.m. The new module will be released the day after our mastery session. The first module, again, will be released on the 22nd, February 22nd. You'll have almost a full week to watch module number 1 before our first mastery session on March 1st. March 2nd, second module will be released, and so on. Okay? Now, what are we going to teach? Here it is. Module number 1, the difference between fundamental and technical analysis. We'll talk more about it. We'll talk about the importance of market direction, and we really dive into the indicators here and really what to look for. Number 2, we get into some technical analysis now, the importance of price structure and volume analysis. Different ways to view price, whether price is trending, neutral, or an extreme situation, and the extreme importance of volume. Rising price is not bullish unless it's accompanied by strong volume. Okay, so we will understand the relationship between price and volume at all times. Module number 3, an introduction to candlestick trading. I'm going to teach profitable bullish and bearish reversal signals and how to combine those signals with Western indicators like support and resistance, moving averages, and stochastics. Module number 4, this is a good one, folks. The most profitable indicators and oscillators. I believe there are, 12 or 15 different indicators that we will teach in this module. Trending indicators like moving averages, the MACD, range-bound indicators, neutral indicators like stochastics and RSI, Fibonacci retracements, understanding bullish and bearish divergences. Module number 5, trade management and psychology. How important is this? Okay, important importance of having a trading plan, risk management strategies, how to size positions correctly, diversification, asset management. We don't want to overweight ourselves in one industry or sector. And then finally, the VectorVest Advantage. We're going to combine everything, guys. We are going to put everything together. You guys are going to have a plan after we're done here. We'll talk about the Pro Trader technical scans and how they can really simplify the process. And then we're also going to teach more about the NPI, the near perfect indicator. Okay? I'm going to stick around, guys, just for a few more minutes, answer any questions that you have. Again, thank you, Ray, so much for being here, answering questions along the way. If Ray didn't answer a question or if you have one, guys, please let me know, and I'll be more than happy to answer. I'm just going to take a quick drink if you don't mind. Yes, the slides. Thank you. Thank you, thank you, thank you. I will put them in the handout section of your GoToMeeting control panel. I'll let you guys know. It's a PDF. I'll let you guys know when it's in there. John says, which Pro Trader search should a moderate risk investor use? Okay, so a moderate risk investor is maybe sometimes otherwise known as a prudent investor, right? So we have a search we have a folder in Unisearch called Prudent. So some of the strategies, just to give you a few, best of the biggies. Look at the sort of best of the biggies. RV times RS times GRT times market cap. Okay, you're looking for the best combination of those three indicators. That's going to give you a fundamentally sound company. And here's the list when I just run that search. So that's kind of your where you start, right? And then you layer in the technical aspect of it to find a more favorable entry. All right. So, that's just one, guys. I mean, any of them, ruler stocks is another good one. So there's not just one search, but I more important than one search, I think, is what are the values of the indicators? Where do they need to be? Okay. And shoot, you could create your own. You could just, create a search of indicators that and values that you want to see, or we have the ones in that prudent folder. Awesome. All right. Well, guys, listen. If you're in, type in I'm in. Just type in I'm in the chat box. This is a brand new course. Myself, David Paul, Ron Wheeler, guys. Ron Wheeler, who is our options guy, manager of options trading. He's going to join us for this course. Very rarely does he do trading courses like this, but we're happy to have him, and also Stan Heller. We'll be your instructors. We start in a couple weeks. Fantastic. So Derek says, you've sold me. Thanks. Awesome, Derek. Fred says, I'm in. Krishnan says, I'm in. Francis says, I'm in. Welcome aboard, guys. We start in a couple of weeks. Really looking forward to this course. Again, there's a reason why you take a course in VectorVest. I don't know, Trade Like a Pro, Precision Swing Trading, Successful Investor. All the content's there, right? This is a brand new course. We're gonna have the most recent content and more recent examples in that content. So they're going to be kind of trickled out 1 week at a time. We like to do that for new courses to give you guys the most recent content. All right. Any other questions? Any other questions about anything that I talked about today? The hyperlink is not working. VectorVest.com/trends. It is working for me. Okay, then you have to maybe sign in there, Krishnan. If it took you to your subscriptions, maybe sign in. Go to the catalog, and you'll see it there. Okay, dates and times. So by the way, guys, once you register, you will get emails from us with the dates and the times of the mastery support sessions. But let's see if I can back up here far enough. There they are. They're the live mastery sessions. They all begin at 1 p.m. and they start on March 1st, and we go each Wednesday there until April 5th. Okay. Jay says the link's working for you. Good. Okay. Just glad. Okay. So I'd say the link is working, but where do I find the copy of the presentation in today's meeting? That is in the handout section of your GoToMeeting control panel. So you're looking at your GoToMeeting control panel. You should see it says handouts. That's where it is. Elite price, guys, is the same as it is right now. $8.95. The elite rate is $9.95. That's the normal elite rate. But if you're an elite subscriber, save yourself a few bucks. Elite rate is always half off the regular price. So $19.90, $9.95 is the elite rate. So you save $100 even if you're an elite subscriber than waiting longer, the next couple of days, because that $8.95 rate will go away very soon. All right. Let's see. Yes, you get VectorVest real time with the course. Yes. The starting date, and I know this, it is, hold on. Starting date is soon. I'm not sure exactly when the starting date is, guys. I think it might be February. Not quite sure. If you want to know the starting date, guys, just give our support department a call. They'll let you know. Date is escaping me at the moment. I apologize. Yes, the mastery sessions are recorded. Yes. And end of the day. Yes, to get the special price. End of today. Okay. Yep. Okay, answered that. Okay. I'm banging through them. Yeah, but that is a special rate, guys. That $8.95. So let me go forward. Question is, what values did I enter into the Pro Trader day 1 and day 2? Okay, so let me just go through that real quick again. What I did was, it wasn't Pro Trader that I used for that scan. It was RT, right? RT is a technical indicator. So within the Pro Trader tool, you get all the industry standard technical indicators, MACD, RSI, stochastics, support and resistance. I used in my example, and what in the course, guys, we're going to teach you how to use all those other indicators, by the way. All of them. In my example, I used RT. So just to show you there, Kasaba, I said stocks, capital appreciation, RT. My operator was trending. And then in the value box, I went custom. And on day 2, I said less than 1. And on day 1, I said greater than 1. So the most recent day, I want it to be greater than 1. The day before, I want it to be less than 1. Okay? No, Rodney. Yeah, you could give our support if you don't have the slides for some reason, guys. And again, the slides are in the handout section. You can just open them up from there and download them to your computer. If you don't see them for whatever reason, give our support department a call and they'll have a copy for you. Okay. Yes, Andrew says, I'm currently using VV Intraday, but if I do the course, they'll give me 7 days premium. Can I return to my original intraday subscription after the course is finished? Yes, my sub includes SI coaching sessions. You could go back to intraday, but remember, you do lose the Pro Trader tool, which is the technical analysis scanning tool. You could buy it. It is an available add-on if you don't have VectorVest Premium. It's a one-time fee of you could get it for as low as $395, but that's if you don't want to continue with the real-time data with all the other tools in it. Okay, you're welcome. No, it's not too soon to take the course, Benita. I don't think so. I said earlier that, maybe I didn't say it. I think this is so important. I really do. I think being able to blend fundamental valuation with technical analysis, I think that's so important for not only just swing traders, but and not only for long-term investors. Hey, let's be both, guys. This is what we're trying to kind of get you where we want to get you. We want you to be both. We want you to understand how to invest and understand how to trade. You're just setting yourself up for some again, consistent returns long term. Awesome. Roberto says I'm in. Awesome. All right. Yep. Andrew says Andrew's in a successful investing program with Brian and Todd. So that's more of a long-term portfolio management coaching group, right? That's what they teach you there, how to manage that type of portfolio. He says, I find their weekly coaching sessions very valuable and would like to keep it. Yeah, you wouldn't lose it. Again, Andrew, I don't know specifically exactly what you have, but our support department will explain it all if you're confused about what you have, what I'll miss if I do this or do that. So they'll explain that all to you. All right, guys. Any other questions? Just some reminders. February 22nd is next Wednesday. That is the day that the first module will be released. You will see module 1. By the way, once you get into the course, once you register, once you get into the course, you won't see anything now, but I'm sorry, that's not correct. You won't see any modules released. What you'll see at the bottom, I recorded these little mini graph videos because we're not going to spend a ton of time in the course explaining navigation. We want to save our the content for how to make money. So I recorded these little mini videos on how to manipulate and change your charts, how to add indicators, how to add moving averages, how to save layouts, how to add layouts, and all the stuff, draw lines, everything. So you'll see those there at the very, very bottom, but you won't see any modules yet. Module 1 will be released on Wednesday, a week from today. Oh, yeah, I did. So as a reminder, remember, you're going to get invited to 6 swing trading coaching group sessions. They will begin on March 2nd, I said, right? Yeah, that's the Thursday after our first live mastery session. Those are fantastic sessions, guys. We have a great time. Me and Steve or whoever, we're going to teach you different techniques that are suitable for your swing trading portfolio. So don't remember, you get to join us 6 times for those sessions. Let's see. All right. I appreciate it, my friend. That's a good reminder. That's a good reminder for sure. Yep, we put all this, Jason, we put all this into practice each week, guys. Each week we put it into practice. It's practice. But look, we're trading real money, but we're putting it into practice. We wouldn't teach you these systems and these ways to trade and these different strategies if we didn't believe that they worked, right? That would be terrible. So we put our money literally where our mouth is, and we trade all these different systems. Okay, Jack says, confused about the sign up before the end of day. That $8.95 rate, Jack, will only be available at the end of the day. Otherwise, it will revert back to the early bird rate of $14.95. Remember, the regular price is $19.90. So early bird, $14.95. Special webcast rate because, look, not many people, well, there was a lot of you in here, but a lot of other people didn't come to the webinar for whatever reason. Hey, for whatever reason. But as a thank you for those of you guys that are here, we like to really discount the rate of the course. Okay, VectorVest.com/trends. Yep, thank you, Ray. Gotcha, Jack. I'm sorry. VectorVest.com/trends. All right, folks. Well, I had a great time today. Look, this was our not only our kickoff course or our first time we're launching this course, but first time doing this webinar. Hope you guys got a little out of it. Understand, really how to blend the two and what to look for. And the course is going to really elaborate on that. And we hope to see you guys there. So we'll begin in a couple weeks. Take care, everybody. Really hope you enjoyed today, and we'll see everybody very, very soon. Take care, everybody.